Get some questions up. All right. So, good morning. Good morning. I'm pretty sure this is not the right one. There's going to be some upset people because this is labeled testing, and not the Wednesday webinar that the team set up on YouTube. So that's okay. That's okay. Yeah, I don't want to hear it about that webcam, Terry. I've had enough of this webcam. I'm going to switch it up. I'm going to switch it up there. Okay. All right. The other thing that we're going to be working here, guys, is there's going to be a delay on the questions compared to what it's about a 30-second delay in questions. So we'll kind of feel that out and see how that goes, but that's okay. Nazar from UAE, very nice, 436. The day's about done. Okay. Here we go, and I see the live thing coming up. All right. So guys, let's jump in here. This is kind of, I've got like this full production studio kind of setup going here. This is fun. All right. So this is head on here, and let me just get these questions going. So anyways, welcome. And this, as I said, just kind of the first session, just kind of getting a feel for all this fun equipment that we have here and getting the flow. This is going to be the return of the Wednesday webinar. Those of you who've been following for some time, our business may have missed this. We are coming back with a vengeance with Wednesday webinar, trying to show you everything that's going on from our point of view from the markets. But before we get into the specifics of what we're going to accomplish here, if you don't know me, I'm Todd Gordon, and I run tradinganalysis.com. You guys may have seen me on CNBC. I've been doing that for a good 6 or 8 years now, and I was on about 6 times in the last week in this busy market. So from there, I'm the founder of Trading Analysis, and got a great team behind me who's messaging me in every little social media platform that we have here to get this thing set up. So we have members, we have new people, and we'll have some fun. So there's going to be some whatever, we'll deal with that when we come. So we have a rough schedule here, and as I said, this is going to evolve. We're going to have some fun with this. The vision of this show is going to be to kind of, as I said in the video, if you saw the promotional video yesterday I did from the Nasdaq, is make this a trader show. There's a lot of financial networks and information shows that kind of give you the fundamentals and high-level investing. You know, when I'm home, not at the CNBC studios, I like to trade, and I really like getting inside the technicals. Of course, we always have a fundamental backdrop. We know what the intermarket relationships are, but we really want to focus on the technical trading setups, actionable trading setups, try to make the most amount of money possible. I am a trader, first and foremost. This is I've been in the markets ever since I got out of college, and I actually was in the markets in college, trading through school. So that's, I want to try to put that passion forward here. We're going to have interviews on this show, guys that I think are influential in our particular niche within the trading industry. We're going to have fun segments. We're going to have, challenges and questions and giveaways and stuff like that. So this is the first of, I hope to be a long journey. I'm really, really excited. So bear with me on this first go around, probably the first couple go arounds, because there's a lot of stuff to figure out here. Terry and team, I am not on I'm talking to my team here. This is not the live stream that is set up on YouTube, and I'm thinking that we dropped a bunch of people into that one, and they're waiting for that to start. There's a disconnect between Wirecast and the YouTube setup. So if the team could just check into that, there's going to be a lot of unhappy people, and I'm sorry about that. All right. So on schedule, we're only 5 minutes behind. That's good. All right, so let's talk about the markets here, and kind of focus on this crazy volatility that we've seen. Just give me an okay, guys, if audio's all right. I know there's some green screen issues behind me. This is going to happen over this shoulder. Let me tell you what's going on. My life is a little crazy, and I'm not trying to take you away from the market. We are at my in-laws right now. This is a temporary office. This is, and I'll just show you. I'm just going to get used to the software here. This is my father-in-law's, my in-laws' house. We're having a baby in about a week. We just bought a house in Saratoga, which is upstate New York, where I'm from. So there's renovations happening there. But Trish, at the same time, my wife wanted to stay with her doctor here. So we've been living here for the last month or so. When the baby comes next week, which maybe there won't be a Wednesday webinar next week, we'll see. Once she's settled in the next couple of weeks, then we'll start moving back up and I'll have a permanent location. I've got a studio set up. So all these little technical glitches and the lighting and stuff like that will change. So I'm looking forward to kind of getting aggressive with the setup of this kind of show and other kind of ways I can reach out to you. So yeah, so life's been crazy. Throw some volatility in there. Wife's having a baby in a week. It's been wild. All right, so please excuse this. It's just I'm limited in terms of how I can light the green screen behind me. But I'm sure you don't care. All right, so to markets. Yeah, this side camera is in and out of focus. It's a piece of garbage. So just bear with me. Hey Ed, how you doing? Okay, so guys, let's dive in here real quick. Just want to try to keep some kind of schedule here. Yeah, thanks, guys. Yeah, it's fun. It's fun. All right, so yesterday the market was up 500 points, and it's not a kind of thing, as I said on CNBC yesterday. Market doesn't usually crash higher. When you see a lot of volatility on the way down, and then you see like a massive run up, that's usually shorts covering out of fear and greed, not so much like renewed growth outlooks. Yes, the earnings reports were better than the day before, but to me, this kind of spells sort of bear market rally. I think it's a point where I'm neither bullish nor bearish right now. This market, I think, is falling into consolidation, as I'll show you here on the charts in 1 second. I think we might be in a period of consolidation. Now, consolidation is defined by Elliott, and there's no better methodology out there to determine if you're in a trending market or a corrective market. If you saw the YouTube video that we put out, we were talking about kind of being long the Russell up into the highs, and then we turned around and shorted the Nasdaq. This has been a very kind of choppy rally on the way up in the S&P, and then we got a major drop on the way down. So we were long for this move. It was very choppy. We were able to be short, cut it, and now I'm pretty much flat. We put a couple positions on, which I'll talk to you about. But one of the core themes that we're going to be focusing on in this webinar is Elliott Wave Wednesday. Okay, this is my preferred style of understanding the market in terms of where we are in a trend or correction, setting up trades. Elliott Wave is a wonderful methodology to determine where your entry should be, where your exit should be, where to contain your risk. So Elliott Wave is going to be a core theme of from the technical point of view of how we gauge where we are in the market and get in context. And that's the key, is to get context as a trader, to know, do I want to be long the market today? Do I want to be short? Do I want to be flat? How aggressively do I want to be long? How aggressively do I want to be short? These are all important things, and position size is key. So those are all kind of things that we're going to be talking about. And again, so those of you kind of coming in, just realize there is about a 30-second delay. I'm gauging from your questions to what I'm saying. So I've got to find that rhythm. So normally I love to be back and forth and interactive like that. So just realize that. Don't not comment, but if I don't respond, that's why. Okay. So in the S&P 500, guys, I am thinking we might be in a bit of a triangle. Getting off the daily, let me go over to the weekly and kind of just give you a big picture look of what might be happening. I'm concerned that we are falling into consolidation here in the S&P, and not so much concerned, but prepared. We are at some point coming up into a major zone of resistance that will set up a significant prolonged downtrend, a bear market. I was thinking this could be the start of it, and it still may be. In a good Elliott trend, you should see 5 waves, 3 trending waves and 2 corrective waves. I'm fairly clear from February of 16 that that's wave 1, that's wave 2. This has all been wave 3. And then the question that I have in my mind is this wave 4 and we just did a wave 5 top? And if that's the case, we should retrace at least 50% of the 5 wave move that we just put in, which puts you at 2309. Now, Elliott Wave is subjective, just like all forms of analysis. Fundamental analysis, technical analysis, all interpretation of mass herding behavior of traders buying and selling, trying to discount what future data and events may be. That interpretation of mass human interaction is inherently subjective. So Elliott Wave, because it's a little bit more challenging, and it requires you to kind of stretch your imagination a little bit, or it requires you to kind of look for alternate scenarios and kind of play a couple steps forward in your mind. A lot of people have kind of a hard time with it, but it's a great way to kind of play the market like a chess game and think a couple moves down the line. So the question that I have is, I'm not sure if this is still wave 4 and we're about to push higher in wave 5. If it's wave 4, I'm starting to think we might be in a triangle, which a triangle in a 5-wave move typically happens in the 4th wave. It does happen in the 4th wave, and it's 5 waves, as I've laid out here, A, B, C, D, E. So if we kind of stay range-bound between 29.42 and 25.64, we probably are in a triangle that might take us into the end of the year. If that's the case, we got to switch tactics. We've got to go from trying to trend trade, which easy money was made on the long side here. We just did make some very nice money on the downside here. There's a video of us being short the Nasdaq on YouTube. Check that out. But if we start to settle in, we're going to shift our option trading strategies, because the context that Elliott Wave gives us tells us that it might be better to switch towards a delta neutral option strategy, which is going sideways, collecting theta, keeping your delta low until the triangle exhausts itself. So that's what I'm concerned about. All right, that's what I'm concerned about. Just watching the numbers here. All right, so that is the S&P getting off of the daily down to the half day, which is the 195-minute chart. We've had a pretty impressive move back up. I'm not sure that this is not this correction right here, okay? If we start to find a little bit of resistance today into 2820 area, 2795, we are going to open lower this morning. It's not crazy, but if we start to get a little bit of weakness here, this very well could be the case, and we could be heading lower in 5. The Nasdaq has been quite strong. Netflix last night was a big one, so that's putting a lot of confidence into the Nasdaq. I still do have resistance in the Nasdaq from 72.84 to 73.80. If you start to see this zone, this is the NDX cash. If you start to see this zone hold resistance, then we could be in for some problems. This is what I was talking about last night on Netflix and Facebook, or on Trading Nation. I caught a lot of grief on Netflix. We did have a small short position with our customers in Netflix, and the people on Twitter, when I said it on Fast Money, they just exploded. It was pretty funny. People got very mad at me for wanting to be short Netflix. Here's the problem. It's going to open around 380. It's still below the 386 high. The context that the wave principle gives me says, again, we're probably still in this fourth wave. So we're going to open, we're trading right now at about 380. We're still below the October high here at about 386. If it wants to break out and just continue going, fine. Okay, I can work with that. But if we can't hold a bid above 386, which is the old high here, then I do still think we could be able to come down and test this area of the prior, of this fib support zone here, as well as uptrend support around 300. So we'll see. I think a lot of it will depend on what the overall market's doing. The subscriber growth number in Netflix was huge. Let's take a look at the platform. It traded right to the expected move. So if we check Netflix, the expected move was $36 after earnings. We closed at 346. Too early in the morning and up too late working with this hardware to do that math. I'm sure you can do it in your head. 346, close enough, plus 36 is 381. So the expected move in the options market was $36 higher or lower from the close yesterday, which is 346. That's at 381. Guess where we're trading right now? 381. Pretty amazing, right? So we traded up to 405. We backed away. So, is this a screaming buy in Netflix? Not so sure yet. We shall see. I think it's kind of interesting. And again, I have us within the context of Wave 4. Muzi, Forex is not going to be covered. It is on my agenda. I'm just watching questions. Alex, the guy who heads up our foreign exchange and cryptocurrency, we were having some technical issues this morning testing his camera and microphone. We will get it set, but we will have him back next week. But yes, we do offer foreign exchange, cryptocurrency. Alex is amazing at it. Him and I have been working together for over 10 years. So that will be coming not today. Don. There's Jeff Kennedy coming in. Interesting. Your accounts are very basic and doesn't look right from an Elliott Wave perspective. Well, Don, I would have to disagree. What I try not to show too many degrees, Don. But keep in mind, Trading Analysis was selected by Elliott Wave International to be the trade signal provider. You don't want to get too complicated, but I also hide degrees, right? So as you get smaller and smaller, Don, on smaller time frames, you will see more degree. But I try to just kind of give you the basics without complicating you too much. Keep it simple. But if you want a challenge, certainly let us know. But I don't think you're going to find somebody who adheres to the rules and guidelines of Elliott more than we do. Okay. So let's put I should do a poll in here. And speaking of, we're going to be bringing in our first interview here at 9 a.m. That's going to be Jeff Kennedy from Elliott Wave International, good friend of mine. We have a few fun projects going on, so I'm going to be bringing him at 9 o'clock. Two positions that we did put on are Intel and Apple. So let's talk about that to start. I did put Apple on with our subscribers at the close yesterday. AAPL position. So here's a trade that we have on in Apple. I've got a in the two nodes, a 227, 230, 235 call fly. And we're trying to get up to that 230 mark in Apple. And why is that? Well, Apple, I believe, is in a fourth wave. Okay. Let me get you a little perspective here. Wave 4 would compare against this wave 2 right here. I think that Apple is held in extremely well, possibly in triangulation, possibly in a flat, but wave 4 does seem to be in play here. I do think that Apple should be able to go up and retest the upper part of the range here. Okay, so Apple looks very good. I think if the overall market does resume, This is the longer term count in Apple. Wave 3 does break down into a nice 5-wave move, decomposes an impulse, ABC correction, ongoing, ultimately we resume higher. The other trade that we put on was Intel. Intel has moved down into some deep fib support here. Typically this wave 4, wave 4 should test the area of the prior 4. So that's down around $44. You see a lot of kind of complex corrective price structure on the way down in Intel. We put a trade on with the customers here. INTC. That's a 46, 48, 50 call fly. Now what we're doing, guys, is I'm just showing you our positions. At the beginning of the webinar, I said that, listen, we're traders. We get our direction from Elliott. We get it from the underlying fundamentals, intermarket analysis. But most importantly, I look at various wave counts that give me the best reward to risk ratio to put on a trade, right? So we're going to be talking a lot about options, a lot about Elliott Wave. If you're new to Elliott Wave, don't be scared. It takes a little bit of dedication, a little bit of practice, and you can certainly get there. So the Intel trade is designed to move up towards about the 48 mark over the next couple weeks, just coming back up here towards those old B wave highs, nothing too significant. So those are 2 trades. Somebody was asking me about Twitter. Zach just said it. Todd's waves are pretty spot on. Don, I love the challenge. I do. He says, I'm always up for a challenge. That's great. Twitter looks awesome. And Twitter has something, we have an aggressive trade on with Twitter, which is called a bear call ladder. Twitter is pretty similar to, it's almost like an Intel kind of chart where wave 4 has come back to test the area of the prior 4th. I think this is a very corrective structure, and I do think that we should be able to move up in wave 5. We have a buyout trade on. If Twitter were happen to get bought out by year end, this trade would pay off massively. So I am long Twitter, but it's got to make a big move up around the $37, $38 to get paid off. The reward is, I don't know, 30, 40, 50 times the risk that we're taking on this trade. I have to look at the specific trade. So that's Twitter. There's definitely some pullbacks here. All right. So I do know AMD is another one. We are going to talk to Jeff here in just a second. He is very instrumental at Elliott Wave International. He and I have been working on a couple fun projects together, a couple joint projects where he's looking at the Elliott Wave counts, bringing up some trades. I'm executing the option side. So Elliott Wave International put us together, and we've been kind of building this product out, which is really fun. So I'm going to bring Jeff in for the first official. I need some music. Jeff's texting me right now. Jeff, bringing you in right now. Okay. I need some music. I need some jingles. Who knows where we go with this? All right. So let me bring Jeff in. And I'm going to switch this. I've never brought a guest in before. Source. Let's bring Mr. Kennedy in. Yeah, Jeff's pretty good. Yeah, I cover the DAX for sure. Yep. Okay. Stay with me. Jeff. Stay with me, guys. Change source. How about Mr. Kennedy? And while I'm getting this set up, just throw some questions in that we or I or Jeff can answer. Just looking for the button to bring you in. Should be just a second. All right, Mr. Kennedy, where are you? Yeah, we need some Zen music, that's for sure. Interesting. Oh, there we go. There we go. There's see Mr. Kennedy. Now I've just got to bring you in on this layer. Oh, I hear him. Jeff.
Good morning, Mr. Todd.
How you doing, sir?
Doing wonderful, sir.
All right. All right. I'm just breaking this thing over here. Give me a second. Let's see. Change source. Weird. YouTube, everyone listening, can you guys hear Jeff? Just give me a quick yes, no if you can. And then I'm going to try to bring him in here in 1 sec. Need Jeff louder. Okay, well, you can hear him.
I'm here. Can you hear me now?
Yeah. Yeah. Change source. Jeff Kennedy. B. Ho. Watch this. Hey, I think I did it. Mr. Kennedy.
Hello, sir.
How you doing?
Doing well. Happy Wednesday.
Happy Wednesday. Okay, good. Can you guys, and there's going to be, as I said, there's a 30-second delay between us broadcasting and the questions coming in. So, YouTube, how does Jeff sound? Does he look okay? He always looks good. How's his camera look? Okay, perfect. Awesome. So, let me just introduce Jeff. Jeff Kennedy he's an instrumental guy at Elliott Wave International. He's a colleague. He's a friend. He is a wonderful Elliotician. He's been in the business for, Jeff, are you at 25 years?
Yes, I'm at 25 years.
Oh, okay. Jeff and I collaborate a whole bunch. He is the author of Commodity Junctures at Elliott Wave International, and also Trader's Classroom, which is basically, you know, it's a way to interpret the wave principle, and I'll let Jeff discuss it. Way to interpret the wave principle and also turn it into actionable trading ideas, and that's really what we're trying to do here, is to take all of this analysis that we do on the charts and all the counting of waves and turn it into trading opportunities. So Jeff's wonderful at it, and we're working on a joint project. You guys will hear more information about that going forward. So we're pretty excited. And also, we're going to be in Vegas together at the Traders Expo. You know that. I didn't mention that to you yet.
I did not know you were going to be there.
Yeah, I'm gonna be there. So believe it or not, man, I don't know how this happened, but I'm actually keynoting it.
Oh, really?
Yep. Yeah, it's going to be me, Sosnoff, and Tom Sosnoff and Ralph Alcampora. We're gonna be keynoting it. So,
Yeah, Ralph.
okay, cool. Yeah. So the management at Elliott Wave says they're going to send handlers for us to make sure you and I behave in Vegas.
That's probably a good
All right. So, Jeff, just give us a quick background, and tell us, why you love the wave principle and how you approach the markets every day. And then we'll get into some trading opportunities.
Okay. Well, it's not just that I love the wave principle. I love all forms of technical analysis, and really my passions are teaching, trading, and technical analysis. And I really love the teaching aspect of it. I've done that very actively, say, for the last 10 to 15 years. I even had a stint at Georgia Tech in Georgia for 5 years, teaching as an adjunct instructor, teaching technical analysis to a lot of really, really just crazy smart kids there in their quantitative and computational finance program. But Traders Classroom, that's one of the other services or products I write at Elliott Wave International. It's really designed to teach the subscriber, the individual, these tools, because I really firmly believe that if individuals, the say average layperson, had a basic understanding of technical analysis, they could do so much on their own without having to rely on, say, CNBC or other news.
Hey, what's wrong with CBC? No, just kidding.
No, it's really just empowering. I mean, I really
Hey,
think that
Jeff, I hate to interrupt you. I think we're getting audio, and this is always the first day technical challenges. I think we're getting audio from another device, not your headset. Normally, you are crystal clear. Can you check your sound settings? Right click the little sound icon on the Windows. Just see if the input is your microphone.
okay, back, reload, let me see. I just muted myself. Okay.
Yeah, I hear you. Yeah, the guys are. There's there's a lot of angry people want to know what you're saying.
Okay.
Yeah, no problem. On the so it should be on the if you right click on the little sound icon.
Okay, I see a little microphone here.
Okay, yeah. If you go open sound settings, and then there should.
That I don't see.
Okay. Maybe like a little. How do I describe this? A little speaker on the bottom right hand corner with some audio coming out on the system tray.
Okay, hold on here. I got it. Sounds, open sound settings.
Yep, open sound settings, and then there should be something that says input.
Okay, let's see. Sound. Okay. Sound. Input. Okay, input, microphone, webcam, microphone, USB. Hold on. How's that?
Give us a test.
Test.
Still sounds like that. Yeah. Okay. All right. No pro.
Hold on a minute here. Let me try something.
Oh, that sounds better.
How's this? Working better?
Something's going on with that. We'll have to test it. So we're gonna have to test this next time. But let's try let's bring up some charts and I'll kind of walk me through it. And the sound is coming through. It's very muffled. We'll have to test on your end, no problem. As I told everyone, first day is always fun. But
Okay, well, hold on here. I got two microphones working. How's this?
yep, that's the one that's coming through.
This one right now.
Yeah. Back that one away just a little bit. Maybe throw it on your shirt or. Yep.
There we go.
Oh, there we go. Is that better, guys? Yeah. That's gonna be the one that's coming through.
Okay. Sorry about that, guys. I'm certainly not a tech guy. I'm a technical analyst guy.
No, that's cool. No, it's fine. We're using technology that we have not used before, so So yeah, no, this is good. We'll get you tested and get you set up properly on the mics. But share your screen and show us a couple setups. I alluded to the team that there's 3 stocks that we were looking at here ahead of the open, and I really wanted to jump into AMD, but I was like, I don't want to steal Jeff's thunder. So try sharing the screen.
You got it.
Awesome.
Share screen right there.
Hmm. Okay. Hey Jeff, I this isn't behaving like it was last night on the test. The we gotta go back and test the audio. So let me take it back. I'm gonna try to pick up where you left off. Can you still hear me? Okay. Okay. Yeah, that's all right. That's all right. You know what? We're gonna let me cut you on this one. We're gonna go back and test your audio a little bit more, and let's catch you next week. All right. No, it's that's my fault. Good job though. Good job. Thanks, and I'll catch you later for our project.
Okay, you got it, my friend.
Okay. Thanks, Jeff.
Okay.
Okay. Let's see. All right. So as I said, expect anything here first day. We tested them last night. It was working perfectly. So of course something happened overnight. But hey, guys, we're gonna roll with it. Jeff and I have been setting up some good things. AMD is one that, and actually I'm gonna try to pick up where he was leaving off. AMD is one that has been deeply oversold into wave 4 support. 24, 25 looks pretty good. We did pick up Intel as I showed you. So AMD is going to be one that I'm going to be looking for on the top side. Yep. Okay. So that's that. Let's see here. Let's see. Yeah, I know. This is a one-man show. My team is virtual all over the world. So, yeah, as I said, guys, expect anything first show. We're using some crazy technology here. So, yeah, so don't give up. We're going to get this. We're going to get this for sure. Let's check futures, see where we're at. Futures are down only about 1/3 to 0.5%, so nothing too crazy right there. There's been a lot of volatility right now. So 0.5% is certainly nothing at all. Let's take a look at the macro markets. Let's take a look at bonds. There's a lot of the volatility that's happened recently has been because of the bond market. I'm thinking that bonds may be at a near-term low. Bonds just came out of a triangle consolidation down into wave 5. And notice that, as I said, the volatility kind of got started as bonds started dropping, yields started going up. Well, bonds have kind of stopped moving here a little bit. And that could be kind of a way to tie in, use macro analysis to kind of indicate that maybe the triangle is the way to go in the S&P. We might be going sideways. So I think we're starting to kind of settle into more of a range-bound kind of strategy for now until proven otherwise. The other thing that's been a major factor is the dollar is moving up. Let me switch my screen here. Let me bring those bonds back up. I know I wasn't showing the screen. So bonds showing the wave 5 move here. There we go. Bonds showing the wave 5 move here. So we're looking at 1, 2, 3, triangle 4, down in 5. So again, we're really not seeing much movement here. In fact, bonds have been very range bound here for the last 4 to 5 trading sessions. Flipping over the dollar has been going up quite a bit, but has begun to back away here a little bit. Again, we're seeing kind of a quiet trade over the last 4 to 5 sessions. While the dollar stays sideways, again, I don't think those stock indexes are going to get moving too much because it's been dollar strength and interest rate strength that have really injected that volatility into the market. Let's not forget, guys, that back to those bonds, one of the core thesis that I've been using on CNBC is we've broken 38 years of uptrends in bonds. Okay, we have broken support. If you go over to the semi-log chart and you do your best to connect a trend line, the bond market from 1981 low has broken support. That's an issue, and that's the reason that we're injecting volatility into this market. So this is a generational break in the bond market. If this continues, you're going to continue to see a lot of volatility in the equity market. In the last couple of days, we're taking a breather, which is fine. But if this is truly a 40-year trend break, this is just the start of a major period of volatility. So from a trading point of view, in an investing point of view, I'm starting to think that the easy money of passive investing that we saw in 2018, 2017, 2015 is over. Okay. Now that doesn't mean that we're going to go bonkers today. We can certainly consolidate over the next couple days, couple weeks, but I do think that we might be on the cusp of a major snap higher in volatility coming from, career lows in volatility. So it's a good time to be a trader. I think it's an opportune time to launch this show. Things are definitely interesting. I think it's going to be hard for the passive investor, and I think it's going to be the very ripe age for the trader. So that's bonds. Dollar, I do think is sideways for now, but longer term. Here, let me go out to the weekly chart. The dollar, I do think, is also in a secular uptrend here. We are kind of caught inside of a wave 2. We need to exhaust this correction before the next rally in the dollar continues. That will coincide with higher interest rates. Also, I do think the gold market, as a function of dollar strength, is going to get pummeled. Gold has had every opportunity to rally up through 1,400, couldn't do it, and is set to complete a B wave and ultimately drop down sub 1,000. So if you're long gold and want to be a gold bull, just not see it. Gold has had every opportunity to rally through the inflationary quantitative easing period, to the volatility that we've seen in 2018. It just can't catch a bid. So I think one of the best trades here in the gold market is on the downside sub 1,000, and we'll be looking to do that. We do have opinions on the crypto currencies. We're going to bring our crypto analyst in future shows. We do see Bitcoin going below 5,000. I am short. I continue to be short in Bitcoin. So that's a pretty good spin through the markets. Looking at the Russell, let's talk about small caps. Let's look at small caps. Small caps have really come under a lot of pressure here, and you will see that in a period of dollar strength. You should see the small caps be strong, and they were strong here in May, June, July, but just recently, as that dollar has stopped rallying, you're seeing small caps come off very hard. There's been a rotation back into tech, kind of. So small caps have come off, though I do see the Russell at support here at about 1530, and we had a very strong session up. This does have the makings of the completion of a correction that does set up a move to new highs. So, the thing that the kind of the core theme that I'm taking away here, let me be fancy and switch the camera, is I generally see the indexes going sideways for a period of time, a couple weeks. Ultimately, I do think we could resolve on one more leg higher, and then we drop. But as I said, this is the era of the trader. The active trader should prevail. Hedge fund returns will come back. Hedge fund returns have been very poor. Passive investing has been rewarded. I think that period is coming to a close. All right, so that's that was, I would say, first session. Yeah, I can take a look at Disney for you. I would say first session was about a C+. It could have gone worse. Could have gone much worse. But this will be a long process. Yeah, I can take a look at Disney. There's actually some fun wave counts in Disney. I think he's on my long list of Disney DIS right there. Disney's interesting here. Disney's come out of a long consolidation in Wave 4. Beautiful triangle. It lasted for like 3 years. Finally may have broken consolidation. Okay? So coming out of Wave 4, we're looking at 1, 2, 3, 4. I do think there's a little bit more room for a 5-wave move up. Ultimately, that will be part of a higher degree Wave 5. This is likely just Wave 1 of 5. So off of the weekly, let's get down to the daily. I think Disney is set up for one more push. The 1.618 projection of 1 and 3 is at 121.5. We also have the 2.618. So that's a very nice upside Wave 5 target, 20.8 and 21.57 in Disney. That is one I've definitely been looking at. I've not traded it as aggressively as I want. So certainly looks to be room into the 121 mark in Disney. What other symbols you guys want to take a look at? Oops, let me switch that back. Here's the Disney chart. Okay, let me show you that Disney chart. So we're looking at from 2009, up in 1, down in 2, 3, 4, ultimately up in 5. The weekly chart coming down to the daily. Okay, so there's the triangle here in Wave 4. We're looking at 1, we're looking at 2, 3, 4, and then up in 5. So we should be able to get up to about 120.8, 121.5 in Disney. Yep. Sorry, no charts, but that chart is back up now. What other symbol you guys have? NVIDIA. Oh, here's another one. Yeah, Lulu is another one that's set up pretty well. Looks to be a pretty good, what they call expanded flat in Wave 4. Lulu is one that's just been a monster in this market. This is one that we're definitely looking to scoop up. Wave 4 didn't quite come back to test the area of the prior fourth. Lulu looks pretty solid. The DAX. Where is my DAX? DAX is interesting. I think the DAX is somewhat supported. The DAX, I think, is doing A, B, and ending diagonal C. We've tried to break below supported, but if the DAX can climb back above, that should be productive. We shall see. I thought the DAX has showed pretty good relative strength. So that's that. Okay. China continues to be an issue, FXI. The fact that it broke below this support is just not good. We really, really need to try to hold a bid. The wave count is technically invalid because we did break below. Motive wave has given me the warning signal here, so that's certainly an issue. China just continues to be a drag in this overall market. Asian markets. Obviously, tariffs are pushing that through, and that's going to continue to be a source of volatility. It's pulled our semiconductors down. I was tracking a triangle forever here in the SMH, but I'm thinking we just did an A, triangle B, then down in C, held some support, tried to hold the 95.8 level in the semis, and we've begun to push higher here. So I think the semis might be finally finding a low, which Asian equities do have a big influence on semis. There's a high degree of correlation. So perhaps the Asian markets have begun to find a low, and that would allow the semis to come back. All right. So guys, we're 3 minutes ahead of the open. We're going to have a question of the day. And I do need to set up a poll on YouTube. And we're going to come back and I'm going to show you the answers. But right on the YouTube page, there will be a link of this recording. In fact, I'll set up a poll. I believe I can do it. There'll be a question I'll ask, or there'll be a poll. I want to know what you guys think. Question of the day. Do you think the S&P 500 will break 3,000 this year? So we've got about 2.5 months to go. Will the S&P get through 3K this year? We're at 2809. You have 191 points to go. I'll put a poll up on the YouTube channel, so be sure to come back, answer that question. And if there is no poll, I can't do a poll. So on the recording of this video, write your answer. We'll select one lucky winner next week on the answering, and you will get a pretty significant prize, which will be awarded next week. All right, so you've got to answer. You also have to subscribe to this channel. Okay, so when you go to a YouTube channel, right, let's bring this over. Okay, we're going to go over here. Let's just say we're going to go to YouTube. You have to subscribe. All right, so let's say, who do I not subscribe to? Let's say I want to learn how to Wirecast like you and not look foolish. Okay, so this has nothing to do, Jordan Peterson, how to avoid embarrassing arguments. Okay, so what you want to do is you want to subscribe. So if you answer the question and you have to be subscribed, you hit that red button right there. We'll select you for a prize next week. Okay? All right, guys, that's going to be it. Thanks for bearing with us on the tech. As I said, it's going to be bumpy the first go, probably the second go as well, but we'll continue to do more testing and use the tools that are available to us for hopefully high-quality production. Enjoy it, and appreciate you guys being here. Market's open. Good luck trading. Remember, trading analysis, our motto is plan your trade, trade your plan. We know what the plan is. We have an idea of what we think the indexes are going to do. We know the long stocks. We know the strong stocks. We know the weak stocks. We know what the macro picture is. Got to be prepared heading into every trading day. Okay? Leave it there. Thanks for joining us, and we'll see you next week, Wednesday, 8:30. Have a good one.